Welcome to FOMO Consulting for your daily AMC stock analysis on Tuesday, April 20th. Ladies and gentlemen, we have some highly interesting information. It's been a highly interesting day, and make no mistake about it, the apes are winning. So if you find this video informative and entertaining, please like, share, and subscribe. This is a newer channel, and I would certainly appreciate your support. Let's get into the video. So overall on the market today, it was pretty bloody, down day across the three major indices. Just a bad day in general, and AMC certainly felt the downward pressure of that, but overall I'm pleased. We still held strong. We still maintained above the $9 level. So overall, not a bad day from the larger picture. So AMC was down 3.93% or 38 cents to $9.28. Again, not a horrible day, but as usual, we had the fall off at the opening bell, found some support, and then grinded our way back upwards throughout the afternoon. That has been pretty typical over the last couple of weeks for whatever reason. Your guess is as good as mine from that perspective. But overall, I'm pleased with the performance of the stock today. So, a couple of key things to review here. The indicators are all pretty much starting to trend positive and bullish once again. The moving averages, the MACD continues to tighten up to the signal line. I do anticipate at some point soon we will have a crossover of a bullish nature. That is my belief, and that is what I am seeing in the charts. Most importantly, regarding the squeeze, I believe our opponent, dare I say enemy, has already shown their hand. And what I mean by that is the red line I have drawn around the $14 mark. That was a point of pain for them, I believe. That is where I believe the breaking point is. That may ebb and flow throughout the days. It may be at 12 one day, 13 the next, 14. But I do believe at $14, they vehemently defended that line. They shorted it heavily. The FUD machine picked up substantially in mid-March. As we approached that $14 mark, they fought very hard to knock the stock back down below 14. I do believe that they showed their hand and where the breaking point is. I do believe we can get back to that point very soon. But again, I do believe that threshold is one we're going to have to break to get the squeeze. That is just my opinion. Again, not financial advice. So let me read you a quote, because the market is a circus, and it's been a circus lately with all of the FUD. Tech stocks have been down, been up. We've had crypto rocketing and falling back down. It's been a pretty wild couple of weeks. So let me read you a quote. I've found that the first mistake smart people make is to assume they can't be outsmarted. None other than P.T. Barnum, the greatest showman on earth. I believe the hedge funds think we are smooth-brained apes. We are simple people. We do not belong in their world. We do not have the resources, the intelligence, the intellect, the education to compete with them. We are an inferior opponent to them. And I believe that is their greatest weakness. That is where they will fail, because it is becoming obvious every single day. We have outsmarted them. We know what we're doing. They are trapped, and they are desperately seeking a way out of this. But make no mistake about it, the clock is ticking. We just need to buy and hold, right? That is our best strategy. That is our best weapon. And again, I believe through that process, we have outsmarted them. So let's get shorting, right? The shorts. So as of today, April 20th, there are 372 institutional owners. I do not believe they are all on the long side. They are, I'm sure, a substantial amount are contributing to the short pressure. Positions and numbers have been increasing throughout the last few weeks. I do believe we have a lot of support from the long side. A lot of whales are going to ride this to the moon with us. But I do believe with that institutional ownership, we do have some short positions affecting our progress. Overall, these shares are 100% owned without a doubt. We own 79.3% as of today. Again, this stock is owned by the apes, by the diamond hands, the retail investor, all of these simple people, as I'm sure they think we are. We should be very proud of that. We hold the floor on this stock. At 80%, in my opinion, there is not a lot they can do. They have tried to press this down below $9 for the last couple of weeks. We have incrementally caused upward pressure to resist it going below $9. I do believe that is a very strong floor for us, and at 80%, I do believe that the sky is the limit from that level. The total volume today was almost 27 million. That's about, give or take, 5 million less than yesterday. No big deal. We've been trending in that range for the last couple of weeks. Short volume ratio is 30%, down about 2% from yesterday, but still very, very substantial. We are still primed for the squeeze at that level. That is very substantial. Short borrow fee is, I think, in the perfect place. I believe if we're in that, say, 17 to 25% range, I think that is ideal. Anything above, say, 30%, I believe that kind of plays more into their favor, and I'll show you why here shortly. Short shares available at the time of this recording is 150,000. Utilization, saw a couple Reddit posts and other StockTwit posts. We are at 99.9%. The days to cover is increasing by the day, and that is a great thing, as well as the utilization. They are running out of shares. They are running out of time. The days to cover, I believe, once it crosses the 1, we get to 1, I believe game over. Once we go past that level, the utilization should be at 100%. I believe that is a key statistic. Shares on loan increases by the day. We are at 150 million shares. That is up in the last few days at least 20 million shares. That is absolutely substantial. So what I want to show you here today is a couple interesting things. So I've been doing a little research about very high borrow fees, and I know that's been a big topic on the different social media platforms and different Reddit boards and what have you. The borrow fee, as you can see, can get extremely high. This is, so I took an article from December of 2019, and it was showing the highest borrow fees of all stocks at that time. So I wanted to see what the performance of those stocks after the date of that publication, which was on December 17th, 2019. So this is ticker symbol LMNL. And I kid you not, the borrow fee was 80.4%. So if you look at the performance of the stock The red line is the date of that publication, 12/17. Prior to that publication, the stock was in that $5.60 range. The pop, I don't want to necessarily call it a short squeeze, but it clearly looks like it on the chart, at least a small one. That stock a few days afterwards rocketed to $19.49. Not a bad return, 4 times money, right? But it's not near as substantial as what AMC and GME went through earlier in January. Let's look at this one. So this is Beyond Meat, ticker symbol BYND. At the time of the publication, 12/17/2019, the borrow fee was 59.5%. You can see leading up to that event, the stock was being heavily shorted. There was a lot of downward pressure, obviously consolidated into that $75 channel. After the publication, give or take about a month later, it did quickly rise to a high of $135. Not necessarily a short squeeze, right? Very high borrower fee, did not get the result that we would like to see with AMC. One more. So this is a popular stock these days, Tilray. Borrow fee on 12/17/2019 was 45%. Very, very high. It was in the $17-18 channel at that time, trending downwards. As you can see, continued to go downhill. And in January, it popped. Again, not a huge pop. It went to around the $23 mark, and then continued to fall off from there. So based on these three exceptionally high borrow fee rates, I have not found, me personally, a correlation to, the mother of all squeezes, right? I do not see, in at least my research, there may be out there, certainly comment in the comment section if you find something, but I do not see a big correlation between a high borrow fee rate for your shorts and a huge squeeze afterwards. So let's do a little deeper dive here. This is interesting. So this is GME. So if you look at the borrow fee rate leading up to the big squeeze in late January, it was trending in the low to mid 20s. On the 23rd of January, it spiked to 32%. Obviously, on the day of the event and thereafter, it went nuts, right? It went into the 50s, 82%. But leading up to that event, we were trending in the low to mid 20s, right in the area that we're trending now with AMC. So I thought that was very interesting. On the 26th, GME had an 83.62% borrow fee. Absolutely nuts. But again, you look at the data leading up to that event. It was around the sweet spot, around the area that AMC currently is today. So let's look at AMC. So on January 26th, the borrow fee rate for AMC was 3.21%. Surprising, huh? It was not, the borrow fee was not substantially high, obviously. However, on the 27th, it rocketed to 21.87%. Obviously, the stock went to $20.36. I do believe, based on this research and this small sample size as compared to GME and AMC, and the short borrow fee leading up to a major squeeze event, the 20% range plus or minus, let's say 5%, is, I think, the sweet spot. Going above 30% based on my personal research and due diligence, I found that that is a more bearish pattern. It is more suppressive of any future pops. For whatever reason, the 15 to 25 range seems to be the sweet spot. Ladies and gentlemen, I'm showing you a normal adult brainwave diagram. Not unlike the options chain, they are named beta, alpha, theta, delta, and there's even a gamma. AMC is a very emotionally invested stock. We're all invested for a million different reasons. We invest for life-changing money, for change in the process and the rules, to level the playing field, to have a better life. We all believe in AMC as a company, the executive leadership. We all believe in each other. So I show you this because it's not unlike a stock chart, and behind every stock are people, buyers and sellers. There is a human emotion around buying and selling. So after a red day like today, I believe we just need to relax, right? We just need a little bit of the alpha brainwave, because tomorrow will be another day. We just need to rest. We had a good day when you look at it from a broader perspective from the broader market. AMC performed very strongly. I believe in AMC. I know all of you believe in AMC. So let's keep our heads up, and tomorrow is another day. So we are winning, ladies and gentlemen. We are winning the ball game. We are winning substantially. We are approaching the goal line. We are in the red zone, in my opinion. This is not financial advice. This is just my opinion, but we are in the red zone. We have a first and goal. We have 2 plays in our playbook, which is buy and hold. That is our best method to defeat this opponent. We cannot outspend them. We do not have the resources. We do not have the tools. But what we do have is each other. What we do have is a method of buying and holding. Whether it's a fractional share, 1 share, 5 shares, 100 shares, doesn't matter. We're all in this together, most importantly to make change, I believe. This will be in the history books one day. We just need to be patient, control the ball, as a coach would say, and let's punch it in the goal line, because I do believe the clock is ticking. They are at the 2-minute warning. They are out of timeouts, and the regulations coming up, Mortal Kombat coming out, will, I believe, be a catalyst that will light the match to launch our rocket. One last quote. Shoot for the stars, but if you happen to miss, shoot for the moon instead. By astronaut Neil Armstrong. Very relevant, I believe. And we are going to the moon. I do believe that as well. Ladies and gentlemen, I want to thank you for watching. I hope you found the video informative and entertaining. My goal is to bring you unique perspective, different kind of presentation around the performance of AMC stock on a daily basis. So if you did, please like, share, and subscribe. It is a newer channel, and I would surely appreciate the support. And as always, I hope your life is full of green candles. Thanks again for watching, and I'll see you soon.